Hello, okay, you are welcome again. I want to look at top-down analysis, abbreviation with TDA, top-down analysis. Now, the purpose of trying to do this is to make trading more easier and, just making some improvement and adjustment. Now, the meaning of top-down analysis is the art of going from higher time frame to corresponding lower time frame. Higher time frame you can say HTF, then lower time frame you can say LTF. All right. So the time frames, as you can see on our MT4, MT5, or even on TradingView here, it usually starts from the hourly. Sorry, it's usually you can see the time frames. You can see it. You can see different time frame there. The monthly. In fact, we even have the yearly time frame. Okay. So, but we're not going to go into all that. We have the yearly time frame, 5 years, and all of the time frame on that data range. But our major focus will be on the monthly, weekly, daily, 4 hour, 1 hour, 15 minutes, 1 minute or 5 minutes time frames. So how do they correlate? Like, how are we going to use them to better our trade? That is the reason for this video. So now, the most commonly used time frames for you to trade as a trader, when you look at the monthly time frame, for example, it's going to tell you everything that's going to happen in that month, just one time frame alone. Just one candlestick. We talk about everything that is going to happen in the month. Then the weekly time frame is going to talk about everything that's going to happen throughout the week. If you are trading forex, we only have 5 trading days, Monday to Friday. But like crypto, synthesis, the trading days, it does not have holiday, just Monday to Sunday and so on and so forth. Now, our major focus is how to take advantage of when the week will start on Monday and then see any trading opportunity until Friday. All right. Then we also know that in a day there is 24 hours. 24 hours in a day. So we want to know what are the trading opportunities between these 24 hours that is available in a day. All right. So our major focus is going to be how we are going to look at what price will tell us that throughout that day, this is what price is going to do. We'll mark our chart from the daily time frame. Then we'll check on the 4-hour time frame, 1 hour time frame, 15 minutes, 1 minute or 5 minutes. I can also do 30 minutes, just like that. So it is whatever that suits the particular price action at that moment. But these are just the majorly used time frames: daily, 4 hour, 1 hour, 15 minutes, and 1 or 5 minutes. So the top down analysis tips are this, TDA, top down analysis. The tips or the secret of one of those things that we can take from there is this: we need to take note, like I posted on my Instagram and Twitter page, that higher time frame inducement can most times be lower time frame change of character, or it can also be that lower time frame main structure sweep. Very important. Now, take note that if entry such as moving morning or evening star candlestick patterns is available, you cannot trade accordingly. I will show you pictorial representation of what I'm talking about. Now, let's look at this chart. This explanation. We know from the left hand there that this is our higher time frame inducement, because price is selling, and then other price has given us a break of structure. Price came to the higher time frame inducement. Now, when I say higher time frame inducement, the daily can be higher time frame, the 4 hour can be higher time frame, the 1 hour can be higher time frame, 15 minutes can be higher time frame, just like that. So any of the higher time frame you spot price on, by the time you switch to the corresponding lower time frame, maybe at that time price is at the inducement of that higher time frame, then by the time you switch, you cannot come to the corresponding lower time frame. This is mostly what can happen, that sometimes when price get to the lower time frame, you see that the lower time frame is forming its own structure. Aside from the major time frame structure, it is forming its own structure, and maybe in that structure forming, price is also coming down, and then price has taken the lower time frame inducement already. Then this point, that high point there, is now the higher time frame inducement. So that higher time frame inducement, it can happen that when price now get to it in lower time frame, it now becomes what? A change of character. And how is it going to be the lower time frame change of character? That's when we now have our candlestick body closure above it. When at the time price get to this place, instead of price to sweep it, give us our entry, all those things to sell with respect to the higher time frame, but the lower time frame now, if we now have candlestick body closure, then it is high probability that yes, price is just going to continue to buy from the lower time frame, and probably until it get to where it's going to sell with respect to the higher time frame. I hope you get it. So in this example now, we now see that the lower time frame, when price get to that point of this higher time frame inducement, it gave us a change of character in the lower time frame. Then we can try to see if we can trade it accordingly. Now, that is the first scenario that can happen when price get to higher time frame inducement. Second scenario is when price get to higher time frame inducement, in the lower time frame, most time price is making this type of structure. So when price has taken the inducement in the lower time frame, we'll now see that yes, price, this high point, that is the highest point in the lower time frame now. And that highest point in the lower time frame is the point of inducement in that of the higher time frame. So when price get to that lower time frame high point, price cannot take it out. Maybe when price take it out, price can give us our single candle order block, okay, which is, let me say, this is our evening star candlestick pattern. You can remember the explanation I made about top analysis and the tips. Okay, now in that lower time frame, price can give us our entry using this evening star candlestick pattern. What do we have to do? When price give us that, we just enter the trade, using our entry, just sell it directly until the lower time frame low point, or if the low point of the lower time frame is that of the low point of the higher time frame, we can sell it to that point also. I hope you understand it. Okay, now number 2 tips that can happen with the higher time frame, the top analysis, is this. We can see that in the higher time frame, sometimes higher time frame order block and the lower time frame mitigation with SUB. We know what is SUB, single candle order block. Now we know what is mitigation. Is when price tap into another block. Tapping, that's just another word for tapping. That's mitigation. Now let's look at this scenario that price is selling, and when price is selling, this is already higher time frame inducement. Price take out the higher time frame inducement, then price tap into the higher time frame order block. When price has done that, what do we expect? In the corresponding lower time frame, inside this order block of the higher time frame, by the time you now check the lower time frame of it, sometimes there will be a lower time frame order block. So what do we want price to do? We want price to come into that lower time frame order block that is inside this higher time frame order block. Are you getting it? This is the higher time frame order block. Then we'll come to the lower time frame. In that particular range, we now see that there's an order block there that has not been mitigated. Another block that has FEG, all those things. Now this order block, when price is now coming to it in the lower time frame, we want price to tap into this order block. When price tap on it, give us a single candle order block. Then we wait for the next candlestick to close below it. In this scenario we are selling. If you are buying, we wait for the price to close above this particular candlestick. But now we are selling. We wait for price. the next candlestick that is going to close below this particular candlestick that tap into this lower time frame order block, then it is that particular order block now we now see and enter this trade accordingly. Okay, we can now enter this trade anticipating that when price has formed this order block completely, then price can now reverse into this single candle order block and continue to sell. This type of trading is like double confirmation entry. You want more confirmation, you don't want to enter the trade blindly. Okay, then there are some times that after price has already tapped into this order block in the lower time frame of this higher time frame, after price has tapped into it, price can come tap into it in this single candle order block and continue to sell, which is going to our intended direction. While sometimes price can just come down, take out this high point, give us another entry, another universal candlestick pattern, then we can now enter this trade and sell accordingly. Let me show you an example of what I'm talking about.